a book focusing on Warren Buffett's investment philosophy and business achievements. Buffett, The Making of an American Capitalist by Roger Lowenstein. Have you ever dreamed of financial freedom but didn't know where to start? The world's richest man, Warren Buffett, went from selling gum at age 6 to leading a billion-dollar empire, his story a tale of wisdom and persistence. Roger Lowenstein's Buffett, The Making of an American Capitalist vividly reveals how the Oracle of Omaha transformed his fate with reason and patience. Today, let's step into Buffett's world, uncover his investment philosophy and life lessons, and find your own path to wealth. Introduction. Why Buffett, The Making of an American Capitalist is worth reading. Warren Buffett, known as the Oracle of Omaha, is the greatest investor of the 20th century. His company, Berkshire Hathaway, grew from a failing textile mill into a trillion-dollar giant. Buffett, The Making of an American Capitalist is more than a biography, it's a guide to decision-making, growth, and human nature. Author Roger Lowenstein, with detailed research and interviews, traces Buffett's childhood, career, and life, showing how an ordinary boy became a legend. The book's charm lies in its appeal not just to investors but to anyone striving for excellence. Buffett wasn't born a genius. His success stems from diligence, focus, and deep insight into human nature. He once said, "Investing is simple, but not easy." This book, through Buffett's ups and downs, teaches us how to stay rational in a complex world and find opportunities in failure. Whether you're a career starter, entrepreneur, or curious about wealth management, Buffett, The Making of an American Capitalist offers guidance. As Amazon founder Jeff Bezos said, "Buffett is my teacher. His wisdom transcends money." Reading this book, you'll find that Buffett's investment philosophy is not just a key to wealth but a guide to life. It's not only a journey about money but a quest for self-discovery. Are you ready to follow Buffett and uncover your own formula for success? Let's dive into his story and feel the wisdom behind his every choice. Background: Buffett and the era of Buffett, The Making of an American Capitalist. Warren Buffett was born in 1930 in Omaha, Nebraska, growing up in the shadow of the Great Depression. His father, Howard Buffett, was a stockbroker and congressman, while his mother, Leila, was known for her strictness. Omaha in Buffett's childhood was a quiet small town, but the economic downturn left many families struggling. Failures and soaring unemployment shaped young Buffett's understanding of money and risk. Buffett, The Making of an American Capitalist was published in 1995, when Buffett was already a global investment legend, with Berkshire Hathaway's stock price soaring from $12 to tens of thousands per share. Lowenstein, a veteran Wall Street Journal reporter, spent 5 years researching archives and interviewing Buffett and his inner circle to portray the real Oracle. The book not only chronicles his investment triumphs but also delves into his personality, family, and the era, presenting a nuanced, multi-dimensional figure. Buffett's career spans key periods of American economic history: post-World War II prosperity, the 1970s stagflation crisis, the 1980s tech boom, and the 2008 financial crisis. Influenced by Benjamin Graham's value investing, he also drew inspiration from Philip Fisher and Charlie Munger to develop his unique philosophy. Lowenstein writes, "Buffett is not a speculator, he is an owner of businesses." The book's historical significance lies in capturing American capitalism's shift from the industrial age to the information era. Buffett's success is both a personal legend and a tribute to long-term thinking and rationality. He stayed calm in turbulent markets, using wisdom to overcome noise. As Lowenstein notes in the preface, Buffett's story proves that patience and discipline can create miracles. Understanding this context helps us see why Buffett became an icon of his time. Core insights: Buffett's for life stages. Stage 1: Childhood and the spark of talent. Buffett's investment talent emerged early in childhood. At 6, he sold chewing gum on Omaha streets, earning a few cents per pack. By 8, he was reading finance books from his father's library, fascinated by stock quotes. At 11, he bought his first stock Cities service preferred for $38 a share. Lowenstein writes, "He wasn't playing the market, he was studying businesses." Buffett's childhood was filled with numbers and logic. He calculated baseball stats and ran small ventures, like reselling used golf balls. This obsession with numbers reminds me of Chinese entrepreneur Lei Jun. Lei, fascinated by electronics as a child, took apart radios to study circuits and later founded Xiaomi, becoming a tech giant. Lei once said, "Interest is the best teacher." Buffett's childhood was similar. His passion drove him to self-teach investing, buying 40 acres of farmland at 14 with newspaper delivery earnings to rent out for steady income. Yet, Buffett's early years weren't without challenges. His mother Leila's emotional volatility and criticism made him introverted. He once fainted at school from stress, experiences that built his resilience and taught him to counter emotions with rationality. Buffett's childhood inspires us. Talent needs the nourishment of passion, and setbacks are catalysts for growth. Have you had your own childhood investments? Maybe saving pocket money for a toy or trying a small business venture. Buffett shows us that the seeds of success are often planted in childhood. Stage 2. Learning from Graham and early investments. In 1949, 19-year-old Buffett enrolled at Columbia Business School, studying under value investing pioneer Benjamin Graham. Graham's The Intelligent Investor became his investing Bible, teaching him to seek bargains, stocks priced below their intrinsic value. Buffett devoured financial reports, uncovering undervalued opportunities. He said, "Graham gave me a roadmap." After graduating, he worked at Graham's firm, honing his skills. In 1956, he returned to Omaha and launched the Buffett Partnership, managing funds for family and friends. He invested in companies like American Express and Geico, earning high returns through precise analysis. Lowenstein writes, "He was like a detective, finding cracks in the market." Buffett's focus was remarkable. He read hundreds of pages of financial reports daily and memorized Omaha's phone book to train his memory. This stage reminds me of Hong Kong tycoon Li Ka-shing. In the 1950s, Li started with a plastic flower business, studied market trends, and invested in real estate, eventually becoming Asia's richest man. Li said, "Knowledge is the greatest wealth." Buffett's early success also stemmed from knowledge accumulation, studying not just financials but industry trends and visiting company management. Have you ever poured all your energy into a field? Buffett's journey shows that focus and learning are the cornerstones of success. Stage 3. Berkshire's rise and style evolution. In 1965, Buffett acquired Berkshire Hathaway, a struggling textile mill. He initially planned to buy low and sell high but realized textiles had no future. On Charlie Munger's advice, he shifted to holding quality businesses rather than trading stocks. Lowenstein writes, "He went from hunter to gardener, nurturing business growth." This shift marked the maturity of Buffett's investment philosophy. In 1988, he invested $1 billion in Coca-Cola, buying 7% of the company. Despite competition from Pepsi, Coca-Cola's stock was undervalued, and Buffett saw its brand strength, global reach, and steady cash flow, yielding decades of massive returns. Stage recalls Chinese entrepreneur Jack Ma, who founded Alibaba in 1999 when few believed in it. Ma's faith in the internet's future, like Buffett's patience, led to a global e-commerce giant. Ma said, "Today is tough, tomorrow is tougher, but the day after is beautiful." Buffett's Berkshire rose similarly, patiently investing in companies like the Washington Post and Wells Fargo, building his empire's foundation. Have you ever stuck with an undervalued dream? Buffett's transformation teaches us to shift from short-term hunting to long-term cultivation. Stage 4. Financial crisis and global impact. The 2008 financial crisis shook the world. Markets panicked, banks failed, and stocks plummeted. Buffett became a stabilizing force, investing $5 billion in Goldman Sachs and General Electric, boosting market confidence while snapping up undervalued assets. Lowenstein writes, "Crises are Buffett's stage where he uses rationality to conquer fear." By this stage, Buffett was not just an investor but a global economic influencer. His philanthropy is equally inspiring. In 2006, he pledged 99% of his wealth to the Bill and Melinda Gates Foundation, launching the Giving Pledge to encourage billionaire philanthropy. Yet, he remains frugal, living in his old Omaha home, driving a used car, and eating McDonald's breakfasts. His humility contrasts sharply with his generosity. This stage reminds me of Indian tycoon Mukesh Ambani, who expanded Reliance Industries into telecom and energy during the 2008 crisis, becoming India's richest man. Like Buffett, Ambani supports education and healthcare philanthropy. Both show the responsibility of wealth. Do you aspire to give back with your success? Buffett's later years teach us that true wealth lies in influence and kindness. Buffett's investment philosophy decoded. Buffett's investment philosophy is the heart of Buffett, the making of an American capitalist. Here are 4 key principles to understand his success. 1. Value investing. Buy businesses, not stocks. Inspired by Graham, Buffett buys companies below their intrinsic value. He said, "Buying a stock is buying a piece of a business." His 1988 Coca-Cola investment analyzed its brand, cash flow, and market share, seeing long-term value beyond its stock price. This is like buying a house. You don't sell it for price swings but value its utility. Chinese investor Duan Yongping, who paid $620,000 to dine with Buffett in 2006, applied value investing to Apple and Tencent, reaping huge profits. Duan said, "Invest in what you understand. What's your area of expertise? Study it deeply. It could be your Coca-Cola." Buffett's value investing emphasizes knowing a company's future potential. 2. Circle of competence. Stick to what you know. Buffett avoids unfamiliar industries, like tech stocks, saying, "I only do businesses I can understand." In the 1990s tech boom, he skipped the internet bubble, sticking to insurance and consumer goods, avoiding the 2000 crash. This circle of competence kept him steady in uncertainty. Japanese entrepreneur Kazuo Inamori, founder of Kyocera, focused on ceramics to build a global leader, saying, "Master one thing over dabbling in many." Have you been tempted by trendy fields while ignoring your strengths? List your circle of competence to clarify your path to success. 3. Long-term thinking. Patience is the greatest weapon. Buffett avoids short-term gains, holding stocks like Coca-Cola for over 30 years, earning over 100 times his investment. He said, "If you don't want to hold it for 10 years, don't hold it for 10 minutes." This patience stems from trust in businesses and the power of compounding. Amazon's Jeff Bezos, despite early losses, invested long-term in logistics and cloud computing, revolutionizing retail. Bezos said, "We plant trees for future shade." Buffett's long-term approach is similar, nurturing Berkshire like a tree. What goal requires your patience? Try setting a 10-year plan to see new horizons. 4. Contrarian thinking. Greedy when others are fearful. Buffett buys in panics and sells in euphoria, like his 2008 Goldman Sachs investment, which earned billions. He said, "Be fearful when others are greedy, and greedy when others are fearful." This contrarian mindset demands psychological strength and faith in value. Chinese investor Li Haolai held Bitcoin calmly in 2013 and sold at 2017's peak, profiting massively. Li wrote in The Road to Financial Freedom, "Emotions are the enemy of investing." Buffett ignores market noise, focusing on fundamentals. Next time you face an opportunity or crisis, ask, "Am I driven by emotion or reason?" Practical lessons. Buffett's wisdom for life. Buffett's insights extend beyond investing to guide our lives. Here are 5 lessons for your career, finances, and personal growth. Invest in yourself for the best returns. Buffett spends 5 hours daily reading to stay informed. He said, "The best investment is in your own mind." Elon Musk, through self-taught rocket science, founded SpaceX, transforming aerospace. Try reading a book a week or learning a new skill. Your future self will thank you. 2. Focus yields compound results. Buffett's 70 years of focus on investing led to exponential wealth. Psychologist Anders Ericsson's peak shows focused practice turns ordinary into extraordinary. Spend an hour daily on your core skill, and in 10 years, you'll be an expert. Whether you're a coder, designer, or salesperson, focus sets you apart. 3. Rational decisions beat emotional impulses. Buffett stays calm in crises, making precise investments. Psychologist Daniel Kahneman's thinking, fast and slow notes rational thinking overcomes emotional bias. Next time you're tempted to splurge or argue, pause, read, and list pros and cons. Rationality saves you detours. 4. Wealth's purpose is sharing. Buffett's philanthropy redefines wealth, pledging most of his fortune to charity. He said, "Leave your kids enough to do anything, but not enough to do nothing." Chinese tycoon Cao Duang donated billions to education and poverty relief, saying, "Wealth is a social responsibility." Try donating a small portion of your income monthly, you'll feel the joy of giving. 5. Simple living brings inner freedom. Despite billions, Buffett lives in his old house and eats burgers and Coke. His simplicity challenges consumerism. Swedish activist Greta Thunberg embraces minimalism to focus on climate action, saying, "I don't need excess things." Clear your closet or cut unnecessary spending to discover the power of simplicity. These lessons are achievable for students, workers, or entrepreneurs. Buffett's story shows success isn't luck but the result of choices and persistence. Where can you apply Buffett's wisdom in your life? Buffett's decision framework, from investing to life. Buffett's success lies not only in his philosophy but in his unique decision-making framework. Here are 3 aspects to make wiser choices in life. 1. Moat. Seek lasting advantages. Buffett invests in businesses with moats, advantages competitors can't replicate, like Coca-Cola's brand or Wells Fargo's network. He said, "I love businesses with moats." In life, your moat is your unique skill or network. Chinese filmmaker Jia Hank carved a niche in indie films, gaining global acclaim, saying, "Find your unique edge." What's your moat? Your standout skill or perspective. Strengthen it for a month, and new opportunities will emerge. 2. Margin of safety. Leave room for error. Buffett never overpays, even for great businesses, buying below intrinsic value to reduce risk. His 2008 Goldman Sachs deal included favorable terms for safety. Indian tycoon Ratan Tata bought Jaguar Land Rover at a bargain, ensuring a margin of safety, and turned it profitable. Tata said, "Always leave a backup plan." In life, this means savings, contingency plans, or time buffers. Set a margin of safety for your next big decision, extra budget or time for confidence. 3. Delayed gratification. Plan for the future. Buffett reinvests profits to compound wealth, saying, "Life is like a snowball, find what snow and a long hill." His long-term focus avoids short-term pleasures. Singapore's Lee Kuan Yew invested in education and infrastructure in the 1960s, paving the way for prosperity, saying, "Sacrifice today for tomorrow." What goal requires delayed gratification? Save a bit monthly or study 30 minutes daily to thank your future self. Buffett's framework applies to career planning, budgeting, and relationships, finding certainty in uncertainty and simplicity in complexity. Buffett's human insight. The psychology behind wealth. Buffett's success hinges not just on strategy but on understanding human nature. Here are 3 ways he leverages psychology to enhance decisions. 1. Overcoming fear and greed. Market swings spark fear and greed, but Buffett stays calm. In 2008, he invested in Goldman Sachs amid panic, and in 1999, he avoided the tech bubble. His secret is ignoring market noise and focusing on fundamentals. British investor John Bogle, founder of Vanguard, promoted low-cost index funds, resisting speculation, saying, "Emotions destroy wealth." Next time you're tempted or scared, ask, "Is my decision based on facts or feelings?" 2. Trusts long-term rewards. Buffett values trust with management, investing in companies like Coca-Cola and American Express with strong leaders. He said, "I only work with people I trust." This trust frees him from micromanaging, focusing on strategy. Chinese entrepreneur Ren Hengfei built Huawei by trusting his team to innovate, creating a tech giant. Ren said, "Trust is the greatest motivator." Can you give more trust in your team or family? Trust unlocks greater potential. 3. The power of simplicity. Buffett's life and thinking are minimalist. He eats simple food, lives in a modest home, and invests in straightforward businesses. He said, "Complexity is the enemy of intelligence." This simplicity lets him focus on what matters. Apple's Steve Jobs embraced minimalist design, transforming tech, saying, "Focus and simplicity are my mantra." Simplify your life, cut pointless social events, or declutter your desk for more mental space. Buffett's human insights show wealth is a psychological game, and his calm, trust, and simplicity are wisdom for our fast-paced lives. Conclusion and engagement. Where's your Buffett moment? Buffett, The Making of an American Capitalist, is an epic of rationality, patience, and growth. From an ordinary Omaha boy to a global icon, Warren Buffett proves wisdom and persistence create miracles. He said, "Life is like a snowball, find what snow and a long hill." Where's your what snow and long hill? Is it mastering a skill or chasing a bold dream? Share your story in the comments. Tell me, what have you learned from Buffett? Let's draw strength from the Oracle's wisdom and roll our own snowballs.